What's coming up soon, Andrew?
So we're going into season right now. We're down here in Grove City today, talking to some clients, but we're going into season. Want to kind of talk about what we think the market is going to do coming up, leading into season.
And welcome back to the channel. You've been gone.
I've been gone a while. Yeah. I've been running around, been busy. So
well,
yeah,
we're going to talk about a little bit about a deal that he's got cooking that's very unique and has a lot of challenges as well.
Sure.
And if you have a home similar to this, you call on us. So stay tuned to today's video.
Okay, so we're down here in Grove City,
Englewood, Florida.
Englewood. So you're a good bit south of Sarasota here. And of course, I moved down this way. I'm still doing a lot of deals on Longboat Key. I have a large listing again coming back up again in October up on the river in Bradenton. So we still carry cover this large area, but I am starting to do deals a little bit further south now.
Mm-hmm.
I do have a deal in Matlacha that's supposed to close tomorrow.
Tell everybody where that is.
So Matlacha is, so you're basically headed down just south of like where Boca Grande is.
Okay.
So it's a good bit south of Sarasota.
I've never been there.
It's a cute little kind of artsy town. You pull into town, it's a lot of like, kind of colorful houses that have been painted, very old Florida feel. Everything down there is on the water, but there's only probably 100 houses that are down there.
Okay.
All of them are on the water. There's canals that are built in there, but it's an area that's been hit multiple times by hurricanes. They've had 3 hurricanes hit it in the last 2 years. And 2 of those were like direct hits. So there's a lot of damage down there. So it's good and bad. If you're an investor looking right now, or if you're looking for waterfront property and you're like, yeah, but I can't spend $4 million on Longboat Key.
Lots of people can't.
If you come down to Matlacha, you can find these really great properties that are on the water. And because their market is really depressed right now. And then another thing that hurts their market there is Cape Coral is right there. It's right, and
why do we say Cape Coral?
Cape Coral right now is the worst housing market in the country.
Josh and I talked about that on one of the last videos. It's like all over the news.
It's all over the news.
People think Florida, they see Cape Coral. That ain't all of Florida.
That's not all Florida. But what happened in Cape Coral, this is just my opinion, new construction just way overbuilt. And they way overbuilt, thinking that the COVID increases were just going to continue on, and they missed. And what happened is the market corrected down. The profit margins in those new construction homes weren't there. And then all of these houses hit the market over a period of about 6 to 8 months, and there were just no buyers. So what's happened is that market has also pulled down the markets, probably from Venice down to Fort Myers. It's pulled some of those markets down with it.
Now, Matlacha is north of Fort Myers?
It's north of Fort Myers, south of Port Charlotte. So you're kind of squeezed in there. You're about 30, 35, 40 minutes south of Port Charlotte. Okay. You're close to Yusepa Island. You're close to Cabbage Key. So it's a really great area. But if you wanted to get on the water, you could buy a house down there on the water for $1.2 million, $1.3 million. That would be $3.5 or $4 million up on Longboat Key.
Easily.
Now, you have to really pay attention to your elevations, because a lot of the properties down there absolutely were flooded. You have to pay attention to the damaged properties. So the property that I'm selling right now, or that we're closing on tomorrow.
Yes, you are.
It's 3 units. It was a main house that was on the water, 2 cottages that were historic. The historic cottages down there can be used as residential or commercial. The cottages had lots of water damage. All the drywall was pulled out of them, all the flooring, the kitchens, all the appliances, all the cabinets were pulled out. The main house had a little bit more elevation. It was flooded, but she had already renovated and fixed all of that. So you had 1 rental unit that was ready to go, 2 units in the cottages that needed to be fixed. Swimming pool had some damage to it, but could be repaired. And one of the great things about this property is it had its own boat launch that was on the property. So you could put your boat in and get your boat out of the water very easily. And it was full open bay views. Because I haven't closed yet, I can't say what the sale price was, but we had it listed at $599,000. Now you're talking 3 units that all have open water views. Admittedly, the 2 cottages needed a lot of work. The way we got the deal done is we ended up having to do seller financing.
Which we're coming, and we've been starting to talk about more creative ways. We're
Sure.
seeing a lot more, not a lot. We're seeing more of this being an option.
It's something. This is the first time I've ever done it.
I know.
When I have talked to agents, a lot of agents that are 20 plus years in the business who are saying, I've never done one. I've never done a seller financing. Having the mortgage written was a new step. Understanding how that gets recorded and who pays for that recording fee was a whole step that I had to go through. But what I'm finding is that if you can get creative and find the right buyer for the property, there's still deals out there to be had. So,
and these buyers are asking more and more about. And now, don't get me wrong, there's a lot of scammer, seller financing,
right,
messages that we're getting, and I know exactly when to spot them. I know when they're fraudulent. I know when it's a scam. Like, you could just read the writing. Like, it's just I've done this long enough.
Yeah, I get 3 a week.
Yeah, it's so silly. But it's definitely a way. I've got 2 listings right now that are saying, well, let's be creative. Let's offer seller financing. Sure. And like most of the seller financing is going to be short term, like 6 to 12 months, maybe 3 years.
Right. This one was 3 years.
5 years, not 10, 20 years.
Nobody's going to hold a long-term mortgage. So this seller financing was 3 years at 6% with a balloon note at the end of it. Another reason why we had to do that, especially on this property, was there were so many repairs that needed to be done. Right. It would never qualify. It would never pass the inspections that would be necessary in order for it to qualify to be insured. So, we couldn't get insurance
or finance.
So you couldn't pass the inspections, so you couldn't get insurance, so you couldn't get financing. So what we ended up doing is saying, well, we'll do seller financing for 3 years. That gives you 3 years to fix all of the issues on the property, eventually pass the inspections, and then eventually get insurance, and then you can refinance it on a traditional note and be fine.
It's a win-win for both parties.
Sure.
They both have to see the value in that. They both, it's got to be priced aggressively enough for the buyer to leave enough room for
renovations,
financial obligation to renovate.
Right.
And also, doesn't this property take into account for the 50-50 rule or no?
So I kind of worked through that a couple of different ways, and there was enough room on the 50-50 rule. One of my things that I learned in this deal is that once an appraisal's done, it can reset your 50-50 rule. So what they're planning on doing is purchasing the property, and keep in mind the 50-50 rule only applies to renovations that you have to pull permits for, right?
It's not like cosmetic.
It's not cosmetic, paint
hanging lights,
or flooring, that kind of thing. So there was enough room that what he's going to do is essentially use up the 50-50 rule for the things he needs to critically do right now, and then have it reappraised, which changes that, resets the 50-50 rule, and then opens up more ability for him to do more renovations. Gotcha. And that was his plan. Anyway.
And there's plenty of people that do it in a shadier way.
Sure.
That's not really shady, but plenty of people
kind of working through the system.
Right.
Now, what I'll say is this, though. The real question at this point is, a lot of agents like myself, I had clients that the property that we had listed back in July, end of July, essentially. If they weren't moving, they weren't getting a lot of activity. You're in the slow part of the season. You're out of season. It's summer. There aren't as many buyers. There are no snowbirds here. There aren't as many buyers here. A lot of those properties I took off the market for a 60-day period of time. And the reason being is, my thinking is, remove them from the market, reset them after 60 days as a brand new listing, and then relist them going back into season. The combination of, we believe that interest rates are going to be continuing to drop, and then we'll have more buyers in the market as the snowbirds come back. My feeling is, and what I believe is, mid-October, we should start seeing an uptick in the market, an uptick in showings, an uptick in buyers that are in the market, and more properties will be moving.
Right.
The one concern I do have in this, and this is a very real concern.
We don't have any concerns.
There are a lot of properties that did not pull off the market. They have lots of days on market, and a lot of them are overpriced.
Yeah.
And so my one concern I have with my strategy is we need those properties to sell quickly. They're probably going to end up getting a lot of really lowball offers. And if the sellers aren't willing to sell those properties at those lower offer amounts, we could be sitting in a situation where this huge amount of inventory hits the market.
That's right.
And if those overpriced properties won't move, the inventories are going to swell so large that prices are just going to have to come down. So that's the one concern I have.
And the other thing is too, and we've talked about this, when a seller thinks, okay, the rates are going to go down, so we should raise the price.
That's crazy.
No.
If the rates go down.
Because if your neighbor listed for $200,000 higher and it's the same floor plan, yet we're $200,000 lower, don't you think the buyer's going to come and offer on ours? Ours should be more appealing, and if it is in fact going to drive more buyers, it will drive the price up naturally. Unless you've done updates to a property, raising the price, especially significantly, doesn't look good to the market because buyers can see everything that we do, all of like the
if you go on Zillow
data.
If you go on Zillow, you can see every price change, every price increase or decrease.
Yeah.
Every time it was put on or taken off the market.
So if you just ask the seller, do you think that the price increase will produce more showings? Yes or no?
The answer is no. Absolutely not. And it doesn't matter. What I would say to sellers in that, if they're asking me that question, is no. This is the time to sit where we're at.
Be priced well now.
Be extremely well priced and sell the property.
Right.
If you increase it, the other thing is if you increase the property and a buyer sees that, there becomes this question of
why.
One, why? Two, if there weren't any renovations done, is this really just an unrealistic seller that it's going to be a nightmare getting through the transaction with?
Right.
That, like, you know, it's not, then it becomes an issue of, it's not even about price.
Well, and still too, as a realtor, we're always keeping in mind appraisal, right? So, and I've talked about this in the last video.
Yep.
You know, one unique thing too, and I'm kind of diverting from the topic, sort of, a unique, loan that people are doing, because you mentioned you have the three structure properties. Right. I've got one under contract that has 3 structures. It's the main house, the guest house, and the cottage, or whatever you want to call it. And a lot of people are doing what's called the DSCR loans, which is the debt service ratio loan. So it's not about your credit and income or debt to ratio as much as it is about the income, debt service, or the loan, principal, interest, taxes, and insurance covering the rental income. So as long as the rental income covers the PITI, principal, interest, taxes, insurance, your mortgage payment, basically, then you'll qualify for the loan.
To make it easy, is the money coming in going to cover the payment?
Right.
Let's just make it really easy.
Is it balancing?
Yeah. So if it does, then you're going to well qualify. If it doesn't, then it becomes, then they will probably start looking at your credit and how much income you personally have and those types.
So an agent that has all the documentation prepared, especially rental history and future bookings, that really is important data to give the lender.
Agreed.
But coming back to like the timing, because as we post this, it's almost October 2025.
Right.
And as you said, you've got your big Bradenton River, you know, the riverfront property coming back. I've got I think the Manasota Key property is coming back. We kind of just paused for a while on those because I don't know if the market's ready for these great new properties. I don't know if the market's been ready for these great properties that we have yet. I don't know.
I mean, and look, we're all over the map right now. I have 3 listings I know for sure that are coming. I have 4 others that I'm pretty confident will be coming. And then I have 2 or 3 others that the market needs to come up in order for it to make sense for us to list at the prices. But we are expecting, based on what you and I are seeing right now, I am expecting that it's going to start getting really busy.
I think it's going to get a lot better. Like the first half of this year has just been wild in terms of like unpredictability and just instability. With just everything that's going on in the world that we don't need to talk about, everybody knows. But I have faith that, you know, we'll ride the storm out, so to speak.
Well,
as we're almost ending hurricane season 2. So
we are. I'll say this too. Everybody always, every year, I feel like August and September, realtors come up with 3 new excuses as to why the market's terrible. When the reality is August and September are generally, I realize there are deals that get done in August, September. It's definitely slower. It's substantially slower. October, I feel like we usually get 1 or 2 weeks into October, and it's like a light switch goes on, and all of a sudden we go from, Shayla, I had nothing going on 2 days ago, to, oh my gosh, I have so many showings, I have so many listings, I have so many showings. I'm trying to scramble just to get around to get everything done. So it feels bad whenever things are slow.
We get a few, I would say 3-4 waves like that of like, oh my gosh, I'm stressed out because I'm so busy. And then it's just like real estate in general is waves. But we're getting ready for this last wave of the year, which generally starts early October. Likewise, we are open and available to take more listings.
Absolutely.
If you think it's a disaster property that's had flooding, those properties are moving. We had a swing, a wave. We had a wave of people going and pending those properties.
Well, I've sold 2 now. Yeah, I sold one that was in sort of the South Sarasota area, Forest Lakes area.
Yes.
That was, heavily,
that was a disaster.
Heavily damaged. Roofing issues. It had, and basically, it was a tear down. It was a tear down, and there was a question as to whether or not, well, could you renovate it? I priced it as a tear down. I priced it at lot value, and because of that, it moved. Interestingly enough, it was another realtor that bought it, and he did. He tore it down, and he's building a new construction home there. But I think my point, or our point, is that it is much more difficult to sell a property like that.
Yeah, and those take longer. They take longer generally. You moved that quickly, too.
I moved that one quickly. I mean, even Matlacha.
And you found the buyer.
I found the buyer. I double-sided that. Yep. But also, I think that those are the deals that I'm a little bit more proud of, because they're like, it's extremely difficult to sell something like that. You eliminate a huge part of the market in a property that you can't get insurance on it. It has to be an all cash deal because you can't get insurance, you can't finance it. So it has to be an all cash deal. It really changes the dynamics of of who can purchase that property.
And that's why you're a great agent, because anybody can sell a brand new house, that's $3 million because the parties have money, and it's new and it's easy. It's just easy.
It's a lot easier.
That's a lot easier of a deal than something like that. So kudos to you. I mean, there's always going to be challenges. We're here for it. That's why we say, like, no matter the state of the property or the situation that you're in, we are available full time, and we'd love to hear from you. And I guess ending on that note, we're ready for season. We're ready for you to call us.
Yeah, absolutely. Call anytime. You can call me on my cell at 941-586-2460.
Yep. Same with me, 941-544-7690.